26 years of CNBC-TV18.
Tata Steel rises 2%. The stock is the top Nifty gainer in a weak market as it announces a comprehensive capex program with multiple units. Analysts say that plans ease concern over the company's growth and market share in India.
And Hindustan Zinc surges as the silver rally continues, fueled by the Fed's 25 basis point rate cut. The stock is higher with a gain of nearly 3%.
Steady start for Polycab following bullish brokerage views. Morgan Stanley sets a target of 86.72 with an overweight rating, citing healthy volume growth despite rising commodity prices.
Interglobe Aviation under pressure as it cuts its capacity growth guidance from high teens growth projected earlier. The stock has now lost 20% of its market cap in December alone.
Keynes Tech gains today after Nomura maintains its buy rating on the stock with a target of 54.55 per share. They say that growth targets have been realigned due to smart meter challenges. Cash flow improvement remains a key monitorable.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see at the bottom of your screen, you have the markets that have turned into the green. And we've seen a 150-point recovery on the Nifty. Is it short-lived or is there more in store for the bulls? Well, we'll know later on in the trading session. But encouraging to see the kind of booster shot Mangalam we've got. And the Nifty Bank, as we speak, it's trading above the 20 DMA.
Yes, it is actually at the 20 DMA, just, flitting around that mark. We will monitor the Nifty Bank in particular because it's actually leading the rally right now, up around 0.4%. And it's been led by a lot of these private banks. So if you look at the private bank index, that itself is up nearly 0.7%. And that causes the Nifty Bank to move higher as well by virtue of its weight. So Kotak Mahindra, for instance, is currently the highest gainer on the Nifty. We're also seeing some traction in a couple of these, FMCG names. So Tata Consumer, for one, has recovered a fair bit from the lows. Nestle continues to do well. Nestle, too, has moved to the high point of trade. Remember, we had a word with the management saying that 2026 looks like a good year for the company. So that stock, too, has perked up. And we are seeing some purchase on Eternal after the drubbing that the stock saw yesterday. So we'll monitor both Eternal as well as Swiggy. There was strong demand to the Swiggy QIP. The Swiggy stock comes up for you. That one too, higher in trade as we speak. Good time to get in Sachidanand Uttekar for a quick market check on the levels and individual stocks. Sachi.
Good morning, Mangalam. Clearly, I think market is divided right now. We have the banking stocks which are helping it, gain some traction on the positive side. But IT, on the other hand, has seen a lot of unwinding. So I think it's better to, maintain a long-short ratio when it comes to, trading positions. From a trading perspective for the Nifty, I think a closing about 25,860 would be mandatory to retain that, upswing that we have seen in today's session. On the lower side, it has maintained a good support near its 50-day exponential moving average, which is placed at 25,740. So until unless this particular level holds, the bias still remains neutral to positive. But going forward, it will be very critical for it to regain its strength on a closing basis above that 58,860 mark, which is also the 5-day exponential moving average resistance now. When we look at Nifty Bank, 58,800 looks like a decent support, but on the higher side, 59,330 needs to be violated on a closing basis to revive the bullish momentum. So I think both the indices are pretty range bound, and that's why we expect some oscillation within this particular range itself. From a stock perspective, what we have recommended to our clients is a short on HCL Tech. We have already seen a negative divergence on its 60-minute scale. We have already seen the stock slipping below its 5-day exponential moving average support. The pullback towards 1666 would be a good healthy zone wherein fresh short positions can be deployed. The stop loss for the trade should be placed at 1674 on closing basis. We are expecting a swing towards 1600, 1610 kind of a zone. On the positive side, Kotak Mahindra Bank has displayed a good resilience. It is outperforming the Bank Nifty right now. If you look at the overall composition, 2100 support has been very critical. we saw the 50-day exponential moving average support also getting sustained there. And the revival has started from that particular level itself. So we're expecting this particular momentum to stretch towards 2260, and hence we are recommending building fresh long positions, keeping a stop loss at 2162 on closing basis.
Okay, all right, got that. Thanks a lot, Sachi, for joining in and giving us your quick take on markets as well as individual stocks. Let's turn our attention to our special segment where we get you a few ideas for profit from Money Control Pro. Anubhav Sahu of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anubhav?
Well, today talking about PCBL, which in its last result was impacted by the deferment of carbon black purchases due to GST rate cut and continued dumping from Russia. Now that said, strong sales numbers from the domestic auto industry points towards a revival in carbon black demand. Now this would be supported by nearly 8 to 10% capacity addition for the company in the current year. Secondly, in the case of subsidiary Aquafarm Chemicals, management has guided for a sequential improvement driven by water treatment and home care industries. Even though there are challenges with the oil and gas industry applications given subdued crude prices. Now, among notable development is the tender win from Saudi water authorities. In addition, battery chemical opportunities unfolding. Companies setting up a plant to produce nano silicon products which aims to extend battery range and charging speed, etc. For the traction for the superconductive grades of carbon black would be a key watch as it finds application in energy storage systems and commands high EBITDA per ton. While the net debt to equity ratio is still elevated, gross reduction of 300 crore debt in current fiscal is commendable. Also, recent consolidation provides an opportunity to accumulate the stock where new growth drivers are taking shape in our view.
All right, with that, what we'll do is take a short break, come back, get more on the markets. A lot of stock-specific action as we speak, a bunch of them moving around. Dixon Tech, for one, actually was down 9% in yesterday's trading session. It's now bouncing back up around 4% as we speak. So nearly half of yesterday's losses have been recovered. Stay tuned.
"26 years of CNBC-TV18. "26 years of CNBC-TV18.
Welcome back. Some green on the markets. Good to see. And the advanced decline ratio as well has turned now in favor of the number of stocks that are advancing, which is good news. The Nifty up 70 points thereabouts. Staying higher, though, has been a bit of a concern. So let's see whether or not we can do that. I think there's an announcement that's come in on Orient Pro in the last few minutes. And that stock, in fact, has spiked up. I think we should get that one up for you on the screen. A bit of a spike is what we are seeing in terms of Orient Pro. Well, let's focus on Tata Steel, though. Tata Steel has announced some major capex programs, but the street is still waiting details with regard to the timelines, execution as well. One of the big details that they put out was that the company is looking at expanding the capacity of NINL by around 4.8 million tons. That takes the total capacity of this particular asset, which is NINL, to around 5.8 million tons. And as we know, this site can be scaled up to 10 million tons. They've hinted about this in various con calls, and now they've gone ahead and they've made this announcement. Next up, the Tata Steel plans to set up 2.5 million tons of thin slab caster as well as rolling facility in Odisha. That will add an equivalent amount of finished steel capacity. So that's the second point. Point number 3, the company will also step up its downstream footprint by establishing a 700,000 hot roll pickling and galvanizing line at its cold roll complex in Maharashtra. Fourth point, Tata Steel has signed strategic partnerships with Lloyd Metals and Energy across mining, logistics, including slurry pipelines, pelletization, and steelmaking in Maharashtra. The plan includes developing a greenfield 6 million ton steel plant in around 2 phases. Separately, Tata Steel has also acquired 50% stake in Triveni Pellets in Odisha for around 630 crores, in which Lloyd Metals, well, they have the remaining 49.99% stake. This ensures secured supply of iron ore pellets and could generate a rough saving of maybe around 1,000 rupees per ton for Tata Steel. The collaboration, what does it bring to the table? Well, it provides Tata Steel a strong presence in the fast-growing western part of the country, along with some raw material security as well. And finally, Tata Steel has said they'll begin work on a 1 million ton Hisarna-based facility in Jamshedpur. That's a process that uses low-grade iron ore. It eliminates coke usage and also incorporates steel slag. The company is already deploying this, remember, at their Ijmuiden or their Netherlands unit. Net-net, these initiatives are viewed positively. They address the long-standing concerns around Tata Steel India's growth trajectory, as well as the market share. Put everything together, Street likes it. Waiting by for details on CapEx with regard to timelines and what does it mean in terms of peak debt.
All right, Nigel. That's about Tata Steel, up around 1.5% right now. The Street likes that. Added with a US Fed rate cut, boosting sentiment in the metal space further. But another stock which is surging, and that's on the back of a bullish note coming in from Morgan Stanley, is Polycab. That's up around 1% as well. Upasana joins in with the key details of what that note says. Upasana.
Well, Morgan Stanley has given an overweight call on this one with a target price of 8,672 per share. While the brokerage says that the volume growth of the company continues to remain healthy despite the rising commodity prices, it also sees strong demand across sectors such as power, T&D, renewables, solar rooftop, real estate, infrastructure, and even data centers. It believes that the company is well placed to deliver power and optical fiber cables, and also companies plans to diversify exports to Middle East, Latin America and Africa is on track. Now, brokerage expects the margin of the company at the upper end of the guidance, that is around 12 to 4% in the near term, and it also believes that the execution on the BharatNet project to start from Q3 FY26 onwards will be the key monitorable.
Okay, all right. Tell us about Kaynes Tech as well. It's surging. I think there's a bullish note coming in from Nomura. Tell us more.
Yeah, certainly. So the Kaynes Tech continues to remain in focus for the fifth trading session, and we are seeing like a couple of mixed brokerage views on this stock after the company held its investor call. Now, Nomura today has given a buy rating with a target price of 5,455 per share. It says that the company has realigned the growth target due to smart meter challenges. The cash flow improvement remains a key monitorable for the investors, and the growth drivers need reassessment given the significant working capital drag. Now, management has addressed the accounting and collection concerns in smart meters, and they have also guided that the smart meter revenue contribution is expected to decline sharply through FY28. Hence, the brokerage has given a buy rating with a lower target price due to the moderated growth outlook. So even Kaynes Tech remains in focus today on the back of this.
Right, Upasana, thanks a lot for that. So that's about Kaynes Tech as well as Polycab. With that, we'll step into a short break. And as we do that, here's a reminder to catch the 30th edition of the Motilal Oswal Wealth Creation Study, which is a deep dive into India's multi-trillion-dollar opportunity with none other than Ramdev Agarwal at 11 a.m. today. Stay tuned for that insightful chat only on CNBC-TV18.
"26 years of CNBC-TV18. 26 years of CNBC-TV18.
Welcome back. Markets trading in the green, but we've got the net equity inflow numbers that are coming there. It's coming closer to around 30,000 crores. That compares with a number of around 25,000 crores on a month-to-month basis. And that explains why, in fact, it's quite a good-looking number, actually, because on a month-to-month basis, it's, seen a bit of a pop-up. Remember the preceding months as well, it was in that vicinity of 40,000 crores approximately. The total AUM as well has gone up to around 80.8 lakh crore, which is good on a month-on-month basis. If I saw that number correct, I think the gold flows actually are relatively lower, which had ballooned up in the previous month itself. Large cap, fund flows, that's higher on a month-to-month basis. The new fund over, obviously the NFO depends on how many issues have been launched as well, so that's a little bit lower. But to help us out with the first reaction, I think we have Suranjana, who joins us, of Mirae Asset Investment Managers on the show. Hi, Suranjana. Thanks a lot for joining in. What do you make of this initial reading? The equity flows have come in closer to around 30,000 crores. In October, it was close to around 25,000 crores. Encouraging?
Yeah, hi. So I think the numbers look decent. I think last month, from from a July high, there was a tapering down which happened month on month. This is probably the month where there has been a slight uptick in terms of the numbers. I wouldn't say it's a large move, but what is good to see is probably, last month, if you saw, the large cap flows had come down significantly to about 900 crores. This month it has gone back to around 1,600 crores. I think what has happened is flexi cap, which is a more diversified strategy from the client point of view, that continues to attract about 8,000 crores, a similar number from last month. The mid and small has continued to get last month, I think around 3,000 crores was the inflow in both these categories. This month has gone up to about 4,000 crores in both categories. So I think net, if we see, I think it's also the sectoral fund category, which at one point in time had, gone up quite a bit because of a lot of new fund offerings that had come in. That is also, cooled off to a certain extent. We did see quite a few NFOs in this month in that category, but the flows weren't very large. So I think it's been more flattish, nothing so concerning at this point in time.
Nothing so concerning. So, Ranjana, thank you for setting that up for us itself. The NFOs were higher, but sectoral funds, as you said, as the moment in the market right now, we aren't seeing much flows there. But I'm looking at some of the data. Multi-asset funds and hybrids, they have been doing well. Do you think that outperformance continues into 2026 as well? And what is your thought on mid and small caps? Is there a trend reversal that we can expect out there in terms of flows?
I think, what has happened is multi-asset category, if you see, amongst all equity and hybrid categories, probably multi-asset is a category where you've seen that the one-year returns have been quite decent, also because of the certain amount of commodity exposure that these products have. Now, there is a, recency bias that we see in terms of investor allocations, and I believe the hybrids doing slightly better than the equity categories has ensured that, there is also incremental inflows that is happening. The other thing what has happened is multi-asset is probably a lot of new to mutual fund industry clients are starting their journey with a solution product like a multi-asset. So which is what is month on month ensuring that this is a category which has been building up. I would think that even, categories like arbitrage, which actually create the large swing in the hybrid category. This month it has been flattish. Last month it was a slightly higher number. I think good to see that even, there was a lot of chasing in terms of the gold ETF, etc. Also, that is also...
All right. Take that point, so Ranjana. Thank you so much for setting it up for us. We have the initial trends, obviously deeper discussions at a later time today, and the important number will be the SIP number as well, something that we will be tracking. With that, we're completely out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes up next. An important conversation with Ramdev Agarwal of Motilal Oswal shortly as well.
"26 years of CNBC TV18.